The mortgage rules just changed. Whether you're 25 struggling to save your first dollar, or 45 feeling like you've started too late, the blueprint to home ownership is completely different in 2026. Stick around, because I'm going to show you the 24-month trick banks are using right now that could save you tens of thousands of dollars. Credit expert Micah Smith recently issued a massive warning. She calls it the American drain. Because of the new 2026 models, millions of people are about to get approved for mortgages they can't actually afford. Without an engineering-grade plan, you could end up underwater before you even unpack. Let's look at the first rule changing the game. Here is the biggest secret of 2026. Legacy FICO is dead. Banks no longer care about a snapshot of your debt today. They are now using, quote, trended data. They look at your exact behavior over the last 24 months. If your debt balances aren't actively trending down, your score isn't going up. This means you can't just game the system a week before applying anymore. Unlike the old system, FICO 10T has a memory. It looks at whether you've been revolving debt, meaning carrying a balance and just paying the interest. Even if you pay it off today, the 2026 model sees that you were a high-risk borrower 6 months ago. You need a 12-month clean trend to get the best engineering-grade rates. Enter VantageScore 4.0. This new model finally counts your rent and utility payments. If you've paid rent on time for years, getting your landlord to report it can literally boost your score by up to 100 points. You are sitting on invisible credit. Go make it visible. But here is how you check if you're actually being reported. Don't assume your landlord is helping you. Most aren't. You need to check your consumer credit report specifically for a rental trade line. If it's not there, you are losing out on points every single month. Tools like Rent Track or Rental Karma can force this data into the 2026 models for a small fee. It's an engineering investment in your future rate. So how much house can you actually afford? We use engineering-grade math. Take your minimum monthly debts and divide them by your pre-tax gross income. To get the prime rates in 2026, you must aggressively engineer this ratio to stay under 36%. If you're at 43%, you're in the danger zone for the American drain. Why does that 36% ratio matter? Because a 1% difference in your mortgage rate on a $500,000 home costs you over $100,000 in interest over the life of the loan. That is money that should be in your brokerage account, not the bank's pocket. This is why we engineer the score first. For my factor investing family, here is the 2026 edge. New underwriting guidelines allow lenders to use asset depletion. They look at your diversified holdings in small cap value funds like AVUV and AVDV and count them as qualifying income. You don't have to sell your shares to buy the house. The shares themselves help you qualify for the loan. Now, here is the insider catch. Lenders love VantageScore because it saves them 90% in credit pull fees. But because it's a newer model, banks are quietly adding a 20-point safety buffer to their requirements. If the loan requires a 740, you better engineer your profile to a 760 to be safe from these hidden lender adjustments. The 5 pillars of credit are unforgiving in 2026. Autopay is non-negotiable. Keep your credit card utilization strictly under 10% to show the model you don't need the money. And for my late starters, your credit age is your superpower. Do not close those old accounts. Finally, the mix of accounts matters. The models want to see that you can handle both credit cards and installment loans. But the biggest killer in 2026 is credit hunger. Avoid all new inquiries for at least 12 months before you walk into a bank. One new car loan can tank your mortgage eligibility. Your roadmap starts exactly 12 months out. Month 1, audit your reports and start that 24-month downward trend. Month 6, put a hard freeze on new inquiries. Month 3, finalize your asset-based qualifications. If you follow this timeline, you aren't just guessing. You're engineering a win. Let's recap your engineering checklist. Audit your 24-month balance trend today. Force your landlord to report your rent. And always build in a 20-point buffer over the bank's minimum requirement. Home ownership is a math problem, and we just solved it. If this engineering-grade analysis helped you gain clarity, subscribe to FactorDad. We master the math so you can master your life and engineer your financial future at any age. I'll see you in the next deep dive.